Hello, fellow master traders, my fellow sheep style traders, fellow chartists. We are here. It's a new day, it's a new week. We are here. The day after Super Bowl Sunday. Are you guys hungover? You guys been drinking? You guys had a good time? Spent time with friends and family? And hopefully your team won. And if your team lost, well, better luck next year. Um, we're here, guys, and look what the market did last Friday. Look at this big body red candle. They took out the 5 daily moving average. They closed below the fib level around 602-ish, but instead of giving us another gap down like they did the last couple of times, they're currently gapping up. What the heck is going on here? Did something happen over the weekend or maybe it's just the market makers doing more market making traps. The market making traps. Well, trading with the traps is like my core principle. I'm like my main thing is looking for the traps and trading them. We look at Tesla, guys. Holy moly, donut shop. I had this 376 level on Tesla. Look at that false breakout setup, guys. Look at it. It just broke out on the 945 candle, and it was, they pulled the rug on that 10 o'clock candle. I think we had some data release, but they pulled the rug on that 10 o'clock candle. False breakout setup. You didn't even have to catch the top. Just catch as it was going down. It was good enough. I mean, it led to a lot more downside. Guys, whether you like Elon Musk or you love Elon Musk, I think we all can agree that Tesla has been incredible as far as the price action goes. And I hope you guys are getting your piece of the pie. We're going to cover Tesla a little bit later in the video. Hey, for the record, Uncle's been saying Tesla is bearish. Okay? I'm not always right, but I am grateful when I am. And you look at SPY as well. Now, SPY I cover a lot in my Discord, guys. I have a whole Discord room that's dedicated to the SPY. And once again, it started off with a pop. They gave us a little pop. There's nothing much, though, but they did clear my 607.5 level, only to give us a false breakout setup. You remember in my last video, Uncle talked about how the market makers, they like to telegraph their movement. You don't always know where they're going to go, but they like to telegraph their movement, and it comes in the form of a trap. And then we had this false breakout, boom, false breakout, boom. It hit the 604 level, had a little dead cat bounce. This is look like I'm going to tell you this. I don't often see this setup as much as I used to, but this right here, this little area right here that you guys can see. Let me see if I can get a marker here. This right here. That's called a wrecking ball setup. A wrecking ball setup followed by a dead cat bounce. Like, it's when you get this big old red candle, it just dropped down to support. And it was very powerful when it hit support. Just imagine a ball just dropping a ball. And then it hit the support and it just bounced. And on the second test of that support, or the third test, however you want to look at it, but when it tests again, this wrecking ball causes damage. It's like the wrecking ball smashed the wall and caused mad damage. It wasn't strong enough to break through like it did up here, but it made it very weak, like a wrecking ball, little dead cat bounce. You throw a ball, bounce a ball on the floor, it bounce, and then boom, smashed. Look at that 1045 candle. And it led to more downside. I mean, these are day trading setups. It looked like it gave us a good swing trading setup, but I mean, with this gap up, it's like it's ruining it. But I tell you this, guys, no matter what happens, whether the market gaps up, gaps down, open around where it closed, my main thing is focusing on the process, focusing on the strategy, the trading plan. And my main thing, like I always say, trading with the traps. Know the levels, know the setups beforehand, and then you want to trade it unbiasedly in real time. Now, right now, we are back above that 602 level. We lost it. We lost it last Friday. So we have to watch that 602 level. As long as above, we may have a false breakdown setup on our hand. So we have to ask ourselves, As long as above, do we remain bullish or bearish? Well, in this case, we would be bullish because we lost that level last Friday. So a recapture would make us bullish. And as long as above, I would remain bullish above 602. Bullish follow through would be to clear 604 and 606 to trigger calls. Now we look at the smaller time frame. Once again, we lost those levels last Friday. So we recapture, it could be looking like a U on a big old U on the 15-minute chart. But the point is, we recapture those levels. Those are false breakdown setups if we include the previous days or the previous trading days price action. Does that make sense? So watch out for those false breakdown setups. Clearing 604, 606 would put another test of 607.5. And maybe this time we can hit 609. Those would be in play. Okay? Now, as far as being bearish goes, we lost that 602. We lost that 5 daily moving average last Friday. Okay? This could be a gap and crap. This could be just to shake some people out. And if it is a shakeout, it has to break down 602. A breakdown of 602 would keep last Friday's breakdown intact. And that's the price action telling us get back to being bearish. Or maybe if you're already in shorts, it's telling you to hold on to your shorts because we're dropping down. 600, 598, and 596 will all be in play, okay? So below 602, Uncle would be bearish because that would make last week's breakdown intact. It would keep it intact, And above 602, I would be bullish, but it'll have to clear 604 and 606 for me to try to go long, all right? This is a bearish engulfing candle, so, breakdown of 602 and 600 would definitely make me, based on that context, it would make me more comfortable to go short. That is technically a bearish engulfing candle. We'll see if it plays out. And if it does, 602, 600 will break down. If it doesn't, guys, because the market doesn't have to do anything, right? That's one of the rules, one of the top 5 rules of trading. And then we clear 604, 606. Don't argue with the price action. You know the market likes to set traps. Just trade with the traps. Triple Q also has a bearish engulfing candle. We lost that 524 level. That's a fib level last Friday. Now we're back above it. So above 524, I would once again be overall bullish because this is false breakdown mode. And clearing 527 and 529 would be bullish. Follow through, or your trigger to go long to put 530.7, 532, which served as a tough resistant level last Friday. So we break out 532. This bearish engulfing candle gets invalidated, putting 534 or higher in play. To keep this bearish engulfing candle in play, 525.5 and 524 fib level must break down to get last week's breakdown. Keep it intact, and that should drop us down to 522 and 519 or lower in play. Okay, the point is today above 524 is bullish. Below it, that's when I'd feel more comfortable getting back to bearish. Now, Tesla's been bearish. Tesla has been bearish. Holy moly. What a breakdown. We're around 356.8-ish right now as of recording this video. I have a fib level at 357.3. Okay. 357.3, 359, 360.5 are all resistant levels. Those levels must clear. If we're going to get some dip buys, those levels must clear to try to get some type of relief bounce going. Okay? Don't trade based on your hate or love for Elon Musk. Trade based on the charts. If we clear 357.3 and 359, we could get a bounce up to 360.5, maybe up to 363 or higher. If we're below 357.3, that is still overall bearish. And if we break down 356, 354, we're heading down lower, down to 350. And I have the next critical fib level at 347.5. Those could definitely be targets. All right, guys. NVDA, it does not have a bearish engulfing candle. It looks a little more bullish than the other ticker symbols. Above 129 puts 130.5 and the fib level at 132 in play. If those levels can clear, then the bounce continue. We do have a massive gap up there. I don't know if Market makers thinking of filling that gap, but that is a long ways away. Okay, but they'll need to clear 130.5 and 132 to even make that a possibility. All right, to end the bounce, because we've been bouncing for multiple days in a row here. Eventually a pullback's gonna come. Okay, I just don't know when. But if we are gonna get a pullback, 129 and 127 support levels must fail. Give us that false breakout setup to put 125.5, the critical fib level at 124 and 122-ish all in play. All right, watch for the false breakout setup. Watch the back test. Remember all the trading principles Uncle try to teach you guys, okay? Share with you guys. Yeah, we had a nice little pullback for NVDA after that rejection from the sell zone. Multiple rejection from the sell zone around 230.4 and pushed it down. It was a strong bounce, strong drop. Fib level around 226.4. We lost that, but now here we are gapping just a little above it. If we are to remain bearish on IWM and get more bearishness coming through, 226.4 is the level to watch. If that level fails, 225, 223 or lower incoming. I think we could drop all the way down to 220, 219 area. But if we're above 226.4 and resistant at 227 at 229 actually. I resist all the way at 229 and 230.5. If those levels can clear, bullish. All right? Bullish. I have resistance at 229, 230.5, especially 230.5. That was a tough sell zone. Above that, all those sell orders are gone, and we could get a very, very bullish move to the upside. Okay? All right, 226.4 loss, look to short. 229 clears, look to long. Apple is looking bullish. Getting excited here. Apple's looking bearish to me. Okay, let me explain. This high that we had on January 31st definitely looks like a lower high. And that was a hell of a rejection from a fib level, by the way. And then you look at the more recent price action. That's a nice red, big body red candle there. We're below the 5 daily moving average. Where's the 50? We're below the 50. And we lost the 20 daily moving average. Okay. That 200 daily moving average is not looking too far away. It's around 221-ish. All right, guys. So you know what I always say about the 5 daily moving average. We're below it. I'm overall bearish. And support that I have right now is at 228.4. If that level fails, we're going to get more downside. Down to 227, 223, 221.5. 200 daily moving average around there. Okay, but overall bearish below 228.4 and 227. Trust no bounce unless we get up above 230 and 232. Above 232 would recapture the 5 daily moving average. And maybe we can get a bounce up to 235 and 237 plus. But I'm watching that 228.4 level. If that level was lost, guys, it's going to be bearish. It's already looking bearish to me, but I'm always ready for the reversal. If there is a reversal, and if there is, it'll come in the form of a false breakdown. So we got to recapture 230, 232, and then maybe we could talk about a potential reversal. But right now, it is looking kind of bearish. All right, guys. Amazon looking bearish as well. Exhaustion gap. What is that? That's a nice, nasty gap down. And, unlike SPY's gap down, it's a SPY gap down. Sometimes they get bought up. Amazon's gap down did not get bought up. As a matter of fact, once it gapped down, they pushed it even further down. Gapping up a tad here, but we always got to watch the levels, okay? Below 233, I'm overall bearish. That is a fib level. Before I even hit 233, I do have a resistance level at 231 and then 233. Both of those levels need to clear or recapture in this case to try to get a bounce going. 235, 237 or higher in play. I'd be bullish again above 237. Now to keep it bearish, staying below 233 is a good start. But if you want some bearish follow through, I have the next support at 229.4. We technically lost. It was a weak breakdown, but we lost that level last Friday. So that level's lost again. That keeps the breakdown intact. 228, 226.5, and 225 or lower would all be in play. All right, guys. Microsoft is also looking bearish to me. That's a bearish engulfing candle, but we are gapping up. Supports at 412 and 410.7. If those levels fail, guys, don't argue with the price action. We're heading down lower. All right. 409 or lower is incoming. If we are to keep this bounce going, because we are gapping up a little bit, but I do have resistance at 414. Okay, 415.5, 417, and 418.7. Gotta clear those levels. 414, 415.5, 417, and 418.7. We clear those levels, recapture those levels. Maybe we could talk about being bullish again, but overall, it is looking bearish. And if we break down those support levels, we could get more downside. Okay, look to react. Meta is not looking bearish. It's actually looking bullish. But yeah, if there's more upside to be had, I have resistance level at 721, 723, and 725. Clear those levels. 727, 730 incoming. If it's pullback time, 720, 718, 716 fib level, and 714 based on this uptrend line. Those levels must fail to get a downside, some downside going, especially 716 and 714, because that's a fib level, and based on this uptrend line, loss of 714 would definitely give the bulls control of momentum. All right, DXY is going for a bounce here. If DXY is bouncing, it can stay above 108, 108.6, and 109 is in play, okay? Don't go bearish on me unless DXY can drop back below 108. Context matter, guys. Now, remember, this ticker symbol likes to inverse the SPY. Not always, but most of the time. So if DXY is bullish, if it stay above 108, clear 108.6, could be meaning SPY is bearish, okay? So don't get bearish on me on DXY unless we lose 108. Above 108, 108.6 stays in play. Coin. Wow, coin. It was coin's nice, but it has an inside candle setup here. The range is pretty big. 269 to 284.6. That's a big range, but it does still, based on the context, that is, sign of chop. Right now I have resistance at 280, 283 in the top of the mother candle at 284.6. Those levels must clear if we want to get some bullishness going, a big bounce to the upside, okay? As far as being bearish goes, supports at 278, 276, and the fib level at 274. Those levels must fail to put 272. And then a test of the mother candle's lows at 269. Those, we have to break down 278, 276, 274 to even put those lows in play. And below 269, bears would be in full control. Those look like it's consolidating. Is it trying to curl up for a bounce? Trust no bounce unless 26 and 28 cents clear. I'll probably look to long as well if it does. But right now, it look like it's chopping. As long as below 26 cents, the next support level is at 22 cents. Okay, that's what I got. And Bitcoin as well look like it's chopping. Trust no bounce unless 98K and 100K can recapture. I'll trust the bounce that we can pop up higher. Otherwise, could be consolidating. It could also head down lower. All right, and if it does, support at 95.8K must fail. It's holding that support right now, but if it fails, it could be a waterfall to those lower levels. All right, guys, let's have a great week. Let's have a great week, guys. Master traders, sheeps, bah! Let's do it. Good luck today. Peace.